Are you in your 50s and looking for some great long-term investment ideas? Looking for higher yielding stocks that get you closer to living off of your investment income? Want to also make sure those big dividends are safe and growing? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. This is the 4th video in our series covering investors of different ages. We already published videos talking about stocks to buy for investors in their 20s, 30s, and 40s. And now I'm talking to investors in their 50s. As someone who started investing in his 20s, is now in his 30s, and is starting to transition into his 40s pretty soon, I've seen my own investment needs and views change over time. As you get older, you deprioritize growth and you start to prioritize things like safety, growth, and income. When you're in your 50s, you have a lot less time to make up for big losses. You can take a big risk on some high-flying, expensive growth stock in your 20s, and if it blows up, no big deal. You've got time. But time becomes less of a luxury as you get older. Plus, as you start to glide into your retirement years, income becomes so important. You want to build up a gaggle of golden geese laying big, safe, growing golden eggs. Because if you have a bunch of stocks in your portfolio that don't produce enough income via their yield, you might have to resort to selling off your stocks in order to produce that income. And that puts you at risk of running out of golden geese to slaughter. It's with this in mind that I want to share with you 3 high-quality dividend growth stocks to consider buying if you're in your 50s. These stocks offer yields up to 4 times higher than the broader market's yield. And these dividends are very safe and they're growing at inflation-beating rates, which allows you to keep up with the rising cost of life. Want to know which 3 stocks I'm talking about? Let's dig in. The first stock I want to share with you is WP Carey Inc., stock ticker WPC. WP Carey is a global real estate investment trust that owns and manages over 1,000 properties. There's plenty of money to be made in real estate, but there are also plenty of headaches to be had in real estate. WP Carey does both for you so that you don't have to. Speaking of making money, this stock yields a whopping 5.9%. That's about 4 times higher than what you'd get with the broader market. And it's safe too. The company is expecting to earn $4.86 in adjusted funds from operations per share at the midpoint this fiscal year, easily covering their dividend that runs just under $4.20 annually. Plus, this is almost a dividend aristocrat with 24 consecutive years of dividend increases. If the dividend weren't safe, it wouldn't have grown for 24 straight years. And while the 5-year dividend growth rate of 1.7% won't knock your socks off, it should allow your purchasing power to remain intact. It's a healthy golden goose laying very large golden eggs, and it's laying slightly more golden eggs every year. Gotta love it. Also, this stock looks inexpensive here. Using that aforementioned fiscal year 2021 guidance, we're talking about a forward price to adjusted funds from operations ratio of 14.7. That's comparable to a PE ratio for a non-REIT stock, and the stock's yield is basically right in line with its own 5-year average. In an expensive market, this is a very nice opportunity for a large, safe, growing dividend. That's why it's one of my top 5 stocks for 2021. The second stock I want to tell you about is Prudential Financial Inc., stock ticker PRU. Prudential Financial is a diversified financial services and products company. Founded way back in 1875, and with their operations spanning from insurance to annuities, Prudential Financial is a long-running global financial powerhouse. You know what else is a powerhouse? Their dividend. The stock yields a very attractive 4.7% right now. That'll cover some bills for sure, and this company is committed to the growth of their dividend with 13 consecutive years of dividend increases. What makes this a very interesting investment isn't just the yield though, it's the dividend growth. Check this out. The stock's 10-year dividend growth rate is 14.4%. It's not very often you'll see a yield near 5% and a long-term dividend growth rate well into the double digits like this. It's a very compelling combination of yield and growth. And this dividend isn't going anywhere but up. Prudential announced in February that it plans on $10 billion in capital returns to shareholders over the next 3 years in the form of buybacks and dividends. Music to my ears. Surprisingly, the stock's valuation remains undemanding even after a big run. The price to sales ratio is right in line with its 5-year average, but the current yield is well over its own 5-year average of 3.9%. We put out a video last year highlighting how attractive this stock was. That was when the stock was below $70 a share. If you missed your chance then, you still have a chance now. Last but not least, let's talk about Exxon Mobil Corporation, stock ticker XOM. Exxon Mobil is one of the largest energy companies in the world. If you're in your 20s and thinking about the next 50 to 60 years of investing, oil and gas might not be terribly interesting. But if you're in your 50s and thinking about a time horizon of say 20 or 30 years, it's a totally different story. While the world is transitioning away from hydrocarbons, this stuff isn't going away tomorrow, 5 years from now, or 10 years from now. That's almost certain. Another thing that's certain, the company's commitment to its very large dividend. Even when COVID-19 took oil prices negative, ExxonMobil kept paying its dividend. That speaks volumes about the commitment. The stock currently yields 6.1%, which is right in the wheelhouse for an older investor who's starting to seriously think about income and covering bills in retirement. More evidence of dividend commitment? How about 38 consecutive years of dividend increases? Recent dividend raises have been small, but you don't need much growth to get the job done when a stock is paying you a 6% plus yield. The yield is this high largely because the stock has been hammered. Even after a recent run, it's still down more than 30% over the last 5 years. That's perhaps created a forward-looking long-term opportunity with the valuation. This is a stock that has averaged a yield of 5% over the last 5 years. Even for a typically high-yielding stock, the current yield is extraordinary. The price-to-sales ratio is right in line with its 5-year average, but the price-to-book ratio is below its recent historical average. I think ExxonMobil can and will continue to pump their stuff and pay their very large dividend for the foreseeable future, which could be very well suited to an older investor who is more income-oriented and relatively limited with the time horizon. If you're not in your 50s, no worries. We recently put out videos for investors in their 20s, 30s, and 40s, and we'll soon have a video coming out that'll cover investors in their 60s. I think all three of these stocks should make for excellent long-term investments for investors of all ages, but their yield-heavy attributes make them particularly suitable to older investors and/or investors who are more income-oriented. As you get older, you simply have less time for the compounding process to play out, which means you might be favoring a more immediate return on your capital. That's where those big dividends come in. These aren't the fastest growing stocks you'll find. Instead, they're akin to experienced, mature golden geese laying big, fat golden eggs for their investors, and each one of them is still laying more eggs year in and year out. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these three stocks. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.